Today is Monday, July the 24th, and this is what's happening in the condo market this week. Thanks for checking out this video once again. First headline of the week is from the Globe and Mail. Toronto housing takes sharp turn into buyer's market. So this article is basically saying that they're breaking down the stats, and the stats show that for the first time, perhaps since 2008, the Toronto market is technically a buyer's market because the number of homes available and properties available for sale has risen quite a bit. The number of properties actually selling has decreased. And so here we are, surprisingly, in a buyer's market. This is obviously something a lot of people are talking about. One thing that this article does not touch on, and which is obviously very important as a condo investor, is that the condo market is definitely not definitely not a buyer's market. It's definitely a seller's market. This is a conversation that I've been having with a lot of my clients and new clients coming on stream this past week is make sure you understand that the condo market is very different from the detached housing market right now. Completely different. So in the detached housing market, yes, it's definitely a buyer's market. Or borderline buyer's market. It's not a strong buyer's market, but it is a buyer's market. In the condo market, however, it's still a strong seller's market. A couple of stats I'll throw it at you. You might have heard in the podcast this week. Detached housing sales to listing ratio is about 31%. Condo sales to listing ratio is about 60%. Hopefully I got that right. So it's about 60% for condos. It's about 30% for detached houses. So condos are still doing very, very well. Affordability is driving this. People can't afford homes. The price of homes have shot up so much over the past few years. People just can't afford it. Gravity has set into the price of homes, and things are naturally starting to come down because they've just gone up too far, too fast. We're not seeing that same thing in the condo market. Prices are still rising. Bidding wars are still happening. It's not as strong of a seller's market as it was 2-3 months ago, but it's still a seller's market. Prices are still rising at historic levels, and the shortage of inventory is more acute than it's ever been in the last 5 or 10 years. Next article is from the Financial Post. Headline is, now that the Bank of Canada has scratched the interest rate itch, get ready for more. Get ready for more. So interest rates, obviously, big topic in the news this month. There hasn't been news about interest rates in 7 years. Interest rates haven't done anything in 7 years since 2010. So the interest rates just went up 25 basis points. It's naturally going to be big news. We're going to get a lot of headlines about this. Is this a change in how things are going? Is it going to continue like this? These are the sort of headlines that we're going to keep seeing. And we're seeing battling headlines on both sides of the fence. This one is sort of catching your eye and leading you to believe that more interest rates are coming. They've scratched the itch. Get ready for more. So that kind of a narrative is probably going to be the dominant narrative moving forward. But again, if you listen to the podcast, if you study what's actually going on in the economy, if you look at the fact that inflation rate now, the inflation rates just came out last week as well. They are at a 10-year low or 20-year low, actually. Inflation rates are a 20-year low. There's many other factors that we talked about in the interview this week with David Larocque, mortgage broker. You want to check that out on the podcast and learn reasons why I'm not a believer that interest rates are going to continue to go up, at least not with any significance. And if they do go up, it's going to be very, very, very slowly. There's many indications that the interest rates will not go up at all. There's many indications that you could argue the interest rates might actually have to go down moving forward. Nobody knows. Nobody has a crystal ball. But one thing's for sure, if you look at the Bank of Canada's track record over the last 10 years of this, they've been wrong every single time. Every single time they tell us, guys, interest rates are probably going to go up at this point, at this point, at that point. They don't. So we don't really have any reason to believe that interest rates are going to keep going up right now, other than the fact that the headlines are saying that. The narrative is out there that interest rates are so low, they must go up. Well, if you actually look at the economy and look what's happening, if you look at the Canadian dollar, how high it's got, how that's hurting our exports. If you look at the U.S. numbers, which are a mixed bag, some good, some bad, there's not really an overwhelming pile of evidence to say that interest rates must go up. If you look at the fact that the Toronto real estate market is slowing down, you could say, well, there's another factor to say that the Bank of Canada doesn't need to raise interest rates, depending on your perspective, of course. So next article is tying into that from BNN. It's a video, it's an interview with Benjamin Tal, who's been on this show as well. He's a great economist, great guy to listen to with respect to housing. And he's saying CIBC warns of bigger shock to housing than interest rates. So they're talking about this potential stress test, new stress test that OFC, the federal government, is proposing to put in for mortgage borrowers, and would essentially cause everyone to go through this stress test, where you have to qualify for 2 percentage points above your actual mortgage rate. So qualifying at like 4.6%, the poster rate, as opposed to 2.6, 2.8%, the actual rate that you're going to get, or even lower if you're going variable. He's saying if everyone has to go through that, it's going to be a major shock to the real estate markets, much more than the interest rate change that we just had. He's basically calling out the Bank of Canada to say, don't do this right now. You don't need to do this right now. It's not a good idea, in his opinion. So, and a lot of other people are starting to echo that sort of sentiment as well. Don't go too much too soon, federal government, Bank of Canada. Take it easy on the pedal as you're trying to slow things down. So that'll be interesting to see how that develops. The next article from Global News: competition soars among Toronto condo renters hunting for a home. So, talking about the rental market and how feverish and insane it is, especially now. This is that time of year. September 1st is the busiest rental month of the year. Everybody wants, the students and everybody wants to move in August, September 1st. This is the busy. This is the playoffs, as it were, for the rental market every year. If you are an investor and you're looking to rent out your property, you always hope that your tenants will move out. You hope that you'll get possession of your new place around this August 1st, September 1st. This is the dream time to be renting a place. This is when the most activity is occurring. It's about more than 2 times as many condos will be rented this month in August than will be rented in, say, December, a few months from now. So it's a very active market right now. Rental rates are rising. Rental rates keep rising. They're rising at double digits. It's a very tough time to be a renter. It's a very good time to be a landlord in that sense. But the moral of the story I want to point out here is that if you are the investor, if you own the asset, you win. You win if the prices start to slow down, then the rental rates generally start to go up, and vice versa. So if you own the underlying asset, you're going to win. Either rental rates are going to go up because less people are buying and more people are renting, or if everybody's moving over to the buying side and less people are renting, then the prices are going to go up. And that's generally the pattern that you see time and time again over the long term with real estate investing. So more good news if you are an investor, and unfortunately more bad news if you are a renter. And finally, this one is growing up, all about the King and Spadina district, a very detailed, in-depth piece here, which is very interesting if you're a real estate investor downtown, to look at the transformation that's occurred at King and Spadina and King West over the last 15 years. Everyone knows today that this is one of the best neighborhoods downtown. But what some people don't realize is that it wasn't always this way. 15 years ago, only 15 years ago, it's not that long. This was, a horrible place. This was a derelict, sketchy part of town, empty warehouses, hookers on the street, drug dealers, not a place where you'd find many yuppies or whatever they were called at that time, 15, 20 years ago. But a dramatic transformation has taken place, and it sort of outlines how that all came to be. And it's just a very interesting piece to understand the way that neighborhoods mature and develop. Also, it gives some good insight, some beautiful maps on where the future projected population growth is going to happen. So massive population growth has taken place in King and Spadina corridor. sort of from Spadina to Bathurst in that area there. And more growth there is expected to come. But interestingly, most interestingly, is this map that shows sort of projecting out to the next 25, 30 years. And where is most of the projected future growth downtown going to be moving forward? Interestingly, most of it is downtown east, the downtown east side, along the waterfront, the West Don Lands, Regent Park, King Street East, Distillery. All those areas are expected to see massive growth compared to the rest of downtown in the next 25, 30 years. So again, if you're an investor, that's obviously another reason to look at the east side. Downtown relief line potentially coming through there over the next 20 years as well. So many reasons, again, to support investing in the downtown east side. Okay, that's it for this video. Hope you enjoyed it this week. Until next time, have a great week, and we'll talk to you soon.